hear me? So if I can get a really quick yes or Y or something in the chat box if you can hear me. Okay, great. Sounds good. We'll go ahead and get started here. Tonight we're going to be discussing identifying key support and resistance levels. If you're new to the weekly webinars that we do here with MicroQuant with value charts, we try to keep them pretty short. We normally try to aim for around 30 minutes. However, sometimes we do go longer. We do take the time to answer any questions that you have at the end of the webinar. If you have any questions that do not get answered tonight, tomorrow we are having a Q&A webinar. That's tomorrow night at 8:30. You can register for that at valuecharts.com. You can also submit any questions that you want to make sure are answered to support or to feedback at microquant.com. Excuse me, that's feedback at microquant.com if you want to make sure your question gets answered in tomorrow night's Q&A. That normally goes for about an hour to 2 hours depending on how many questions we have. If you have any questions about tonight's topic throughout the webinar, you can submit those via the GoToWebinar side menu at any time, and then at the end we'll go back and look at everything. The way that we have this set up is we'll go through the PowerPoint presentation, the slides really quick, and I'll explain how to identify the support and resistance. And then once we're done with that, we'll pull up TradeStation and I'll show you some actual live examples. We can look at whatever markets you would like to look at and identify some support and resistance levels there. First off, really quick, risk disclaimer. Trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. ValueCharts.com has taken reasonable measures to ensure the accuracy of the information contained herein. However, ValueCharts.com does not guarantee its accuracy and is not liable for any loss or damage which may result directly or indirectly from such content or from an inability to access such information or any delay in or failure of the transmission or the receipt of any instruction or notification in connection therewith. Any past performance results are shown for illustration and example only, are hypothetical, and as such have many inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. And then once again, the CFTC Rule 4.41, just so you know, all the slides and examples given are hypothetical. Although we might have participated in them in trading, they're used for, we're going to go ahead and just call them hypothetical here, just to get the risk or the disclaimer off of us. Now, what is support and resistance? Support and resistance arrives in its different price levels where a market has had a very tough time breaking through it, or that has turned the market in the past. And you'll see them all the time when you're looking at a chart. It's purely technical analysis. You look at a price level, a market will hit it and then bounce off it and move a significant distance in the opposite direction. They can oftentimes make a market stop falling or stop rising. Meaning if a market's heading higher, and there's a resistance level here, a lot of times it'll hit that resistance and then immediately turn around. Or if it's falling and there's support down here, it'll be falling, hit the support, and then immediately turn around. A lot of times it can give you some great opportunities for trading and potentially low risk opportunities. We've done many of these in the trading room where we'll look for a support or resistance, and then we will look for a divergence or a reversal pattern on that support or resistance. That way we can use very tight stops, and if it respects the support or resistance level, it'll turn and move back in our direction. Now, there's a few different rules for identifying support or resistance. The first one is the price level has to have caused a significant bounce in the past. Meaning just because the market was going up, okay, you had an up day, another up day, another up day, and then a down day, and then a down day, and then another up day. That is not going to be a resistance level. When the market has gone up, way up, stops, and immediately turns around and starts hitting lower, that is a resistance level. So it needs to be a significant bounce in the opposite direction, not just a little tiny anything like that. That's not going to serve as resistance or support. You also, this doesn't necessarily have to be true. It doesn't have to have turned more than one time. However, if a market has, if a resistance level, let's say there's our price point, this resistance, if that market's bounced off it 1, 2, 3, 4 times, you can see it's very strong resistance level. Same for support. If it's bounced off the lows 4 or 5 times, then that's a very strong support level. So the more times a market has bounced off of it, the stronger that support or resistance is. Another thing that doesn't necessarily have to be true, so number 2 and number 3, they don't necessarily have to be true. It's a lot better if they are, meaning the market's showing a sign of weakness when it's approaching that level. For example, if the market has a bearish divergence where we have high prices, but our indicators have gone lower, that's oftentimes a good sign that it's going to respect the resistance. Or if you get right up to it and then you have a reversal candle, let's say you have a hanging man pattern, just like that, and our resistance is right there, that's oftentimes a good sign that it's going to respect that resistance or support, vice versa. So number 2 and number 3, they don't necessarily have to be true. However, if they are, it's a stronger support or resistance. Now here's a few really quick chart examples, and then we will move into looking at actual charts. Now I have a question that's, what's the lowest time frame you can trade a support or resistance off of? And honestly, you want to look at the longer time frames, meaning if it's a weekly resistance level, so your weekly chart has come up and hit this resistance level twice in the past, and then it's come up to hit it again, that's a very strong resistance compared to if it's a 30-minute resistance. So you have a 30-minute resistance level, that has less weight in my mind compared to the weekly. So the longer the time frame that you have the support or resistance level, the better. However, you can look at a support or resistance on any chart, but the longer time frame, the better. I do identify, and you'll see me identify in the trading room oftentimes, I'll say here's a 2-minute support level that I don't think could hold much weight. Meaning on a 2-minute chart, it's bounced off that level a few times in the past, but I'm not going to necessarily trade very much off of that level. And if I am, I'm just going to put my stop 1 or 2 ticks below it, so I'll risk less than $100 because it's not a very strong support compared to if it was a weekly resistance or a daily resistance. So the longer the time frame, the better. Now, with the resistance level, it doesn't always have to be the exact price. It can oftentimes be in the area. So as you can see here, we have a fatter line drawn at right around 1481, and this is soy on a 120-minute chart. You can see it bounced off it right there the first time, right here the second time, right here the third time, and couldn't even quite make it back up to the resistance the 4th time. But in that general area, so with above or below a point or 2 above and a point or 2 below, that's a pretty strong resistance level. So I would say around 1482 and 1479 is going to be your resistance. So a lot of times it's not going to be an exact price. It can be, but in the general area. And oftentimes you'll also see a market, it'll come up, let's say that's the resistance line, it'll hit it once, it'll hit it twice, and before it actually drops, it'll poke above it, knock out the stops that are just a tick beyond it or 2 ticks beyond it, and then it'll tank. Same goes for support levels. If you have support, so if there's your support there, coming across because it bounced off at 1 time, bounced off at a 2nd time, bounced off at a 3rd time, a lot of times you'll see the market poke down to like right here, knock those stops out, and then bounce back up. So you got to keep in mind the general direction that you're expecting the market to move. For here, we were expecting soy to go lower because it was a very strong resistance level. And then a lot of times you can also trade the break, meaning the market will break through it like it did here. If it doesn't immediately bounce back after knocking out the stops, you can try shorting there. And that allows you to catch the rest of that down move. Because when a market breaks through a strong support or resistance level, it will a lot of times start running. So again, that's resistance, where the market hit against it and fell. Resistance is at the high. or above the prices. Support is the lows. Here's a weekly chart of soy where we're seeing support. Now you can see the market came down. This is what formed the support level. Came down, stopped at that price, and immediately reversed up and actually moved a significant distance, about 20 cents higher from bouncing off that support. So you can say, okay, that's a strong support level, just like you would have been able to say that's a support level or this is a support level. But the market came down, bounced, rallied, came back, just about touched it again a second time right there, and then immediately rallied again. So you can say, all right, that's a pretty good support level. Then you can see the market comes back, touched right back in the same place, and then took off once again and never looked back. So again, on a weekly chart, it's a better or stronger support than on a daily chart. Same with a daily compared to a 60-minute, etc. Support is underneath again, resistance is above. Now once a support or resistance level is broken, it becomes the opposite. For example, in crude oil on a daily chart, we had a support level from this low here. We came down, stopped right on top of it, and immediately reversed back up. We came back down again, we bounced around it a little bit. We had a false breakout, then rallied back above it, and then we had another when we actually broke through it and stayed down. That support level is our new resistance. So it was once holding prices up, and now it's holding prices down. You can see it bounced off it 1, 2, 3, 4 times before finally breaking through it. So if it was a strong support level, it's more than likely going to be a strong resistance level. And oftentimes you'll be able to find things where the market will break through it. It'll head higher. Once it's broken above it, it'll come back down and retest it and then continue on, which is exactly what crude oil did here. It broke above, it closed above, it retested it, barely broke down below it to knock out the stops, and then took off and never looked back. Went all the way up to $98 a barrel. And that was here over the past few weeks we saw this happen. So again, another example. Once support is broken, it becomes resistance. This is platinum on a weekly chart. We had resistance or support. Initially support there and support here. Once the market broke through it, that level became resistance. We bounced off it there, we bounced off it here, and we bounced off it here. The market never could really hold above those prices. So again, once the support is broken, it's going to reverse rolls and become resistance, or once resistance is broken, it's going to reverse rolls and become support. Now we can go ahead and pull up some live charts. I'll show you, look up whatever markets you would like me to look up, and help you see what I'm seeing when I look for a support or resistance, and show you how I look for it. Also, I can answer some questions. If you have any questions right now, we'll go ahead and do that, and then once we do the live thing, we'll look up or we will answer more questions again. Just to let everybody know, the live trading room is up and running. We are now in our 14th week with only having 4 down days. Had a great update today. A lot of traders were up much more than I was. We had several people that had caught the $35 an ounce move in gold, the long that we talked about where gold had a bullish divergence, and I talked about going long. A couple people actually took that and took around $3,000 a contract out of gold to the upside today, which was a great trade. So the live trading room, if you want more information about that, you can go to valuecharts.com. But we will continue doing well, hopefully. I'll see everybody that's already subscribed to the trading room bright and early tomorrow morning. That runs Monday through Friday, 8 a.m. until 12 p.m. Eastern Time. Also, Signal Feed is up. We are going to be done with the candlestick reversal subscription and the trend following extreme value subscription. Those are 2 automated strategies that you can subscribe to, where you can track the market on multiple time frames, multiple asset classes, and you can see candlestick reversals for every single futures account that's being able, or futures contract able to be traded on a 30, 60, 120, 240-minute chart, and a daily and a weekly chart. So it'll follow all those for you and then pop up right on your screen, let you know when a reversal pattern occurs, and then it's up to you to decide whether or not it's a good reversal or a bad one. but it'll show you that it'll meet a certain criteria within the automated strategy, and then it will alert you when that criteria is met. The other one, the value MQ extreme value, what that does is it measures the trend of a market. So if a market's trending down and then it pops up and hits overvalued right there, it'll alert you when it hits overvalued, as long as the trend is down. Or if the trend is up and the market drops down and hits undervalued, it'll alert you as soon as it hits undervalued. So you can look to try to enter strategically in on trending markets and catch the rest of the move with potential low risk entry opportunities. And that'll be up there as well by the end of this week. So we'll answer some really quick questions, and then we will pull up the live charts and start looking at the markets, find some support and resistance levels. Is there a set number of times that the price will hit a support or resistance before taking off? No, there is not. As long as that resistance hold, it could poke up against it 10, 15 times. A lot of times though, on the third try, it'll break through. So it'll go 1, 2, 3, break through, and then that'll come down and retest it and then go off. So that's a pattern you can look for. But it can, as long as the resistance level holds, I'm always looking to short or go long off of support and resistance, because normally you don't have to risk about a couple ticks beyond that if you're able to see it right as it's touching against it, and it's a low risk opportunity for a potential high reward. At a strong resistance or support level, how deep do you place your stop as a general rule of thumb? As a general rule of thumb, I personally try not to risk more than $200 a contract when trading futures. So if I'm trading 2 contracts, that's about $400. It really depends on your account size, how much you're willing to risk, what asset you're trading, whether you're trading futures, options, Forex, etc. But normally about a point beyond it is enough. For example, with soy, you put it about a penny or two beyond the support or resistance. Technically speaking, you don't want it to break beyond the support or resistance. So you want your stop far enough away that it won't get hit if you're right that that resistance is going to hold, but close enough that you're going to be out very soon if you were wrong and it breaks through the resistance and starts climbing. How do I suggest to manage or to measure weakness when approaching a level? All right, let's say you have a resistance level here. If you are in the trading room, you know that we trade bullish and bearish divergences all the time. A lot of times you'll see it'll come up to the support and then it'll form a bearish divergence, or that resistance will form a bearish divergence and then it'll head lower. What a bearish divergence is when the prices are heading higher. So this is your price and this is your indicator. We use MQ momentum. So normally when the prices are climbing, your momentum indicator is going to be climbing as well. But what happens with a bearish divergence is the prices continue to go to new highs, but the indicator, instead of climbing with it, it starts to roll over and go lower. So they're no longer following each other. They become negatively correlated. A lot of times that's showing weakness and the market will reverse from there. So when the market is coming up to a resistance level and it has a bearish divergence, that means you're showing weakness. How will we notify people that the new signal feed is available? We will be sending out an alert or an email to all the subscribers once it's up. All right, so what we can do, we'll go ahead and pull up TradeStation and look and see what we have. First off, we have soy here. So for example, with soy, you're going to have resistance across these highs here. Now it broke out above it the other day, and then we had a resistance or a reversal pattern and it tanked. I didn't expect it to tank this far. So we'll see what happens with soy. But the reason that was a resistance level, you can see there were highs there, highs there, highs there, and then again it used to be support right there. There was your support. So you can see it bounced off it multiple times. So it was a very strong resistance level. It was once a support level because it bounced off it here for support. Came down and retested it, broke through it, now it's resistance, bounced off of it multiple times, came up, broke above it, knocked out stops, and then tanked again. So that is resistance in soy, and that's right around a price of $14.81. Someone was asking for gold, so we can pull up gold really quick. And we'll look at gold here on the daily. You're going to have resistance right there off of that low from January 4th. You can compress the chart a bit and look for other resistance levels. Again, that served as support there, which is now resistance. It also served as support back here. Bounced off of it, headed higher. Did the same thing here, bounced off it, headed higher, and was just a few ticks below it there, and then headed higher. So it's a pretty significant support level. That's going to be at 1628 roughly. So we're just down below that a hair. So we'll see where that's going to go. Again, you'll also have resistance coming across right here. That's going to be based off of those lows there and these lows over there, as well as these highs coming across. So, and that's going to be at around 1635. Again, so watch 1635 and 1628 in gold for resistance. We still have about $10, $12 an ounce to go to get there before we retest that first resistance level. Do I give the same importance at those levels when they are further back in time? Yes, I do. It doesn't really matter how far back in time it was. If that price has turned prices down or away in the past, it has the potential to turn them away in the present. So it could have been 2 years ago. I don't care. If it's been a significant support or resistance, then it's going to potentially turn prices once more. Now you can look at the extreme support and resistance. There's going to be an extreme resistance level. Again, right above that, and then right there. That's what we were long off of, or that's why we were long gold from the significant supports down around 1540 and again at 1555. If you looked at 1555, that was right there off of this low. That's a very good support level because it came all the way down, hit it, and then rallied $200 an ounce. So that's going to be a very strong support level. Same with the one down here and these down here. So now we're looking at potentially seeing gold head much, much higher. Well, let's see. Will the new candlestick signals be for equities too, or just futures? It'll be for futures. You can subscribe to futures, to equities, or to Forex, so whatever you would like. Support and resistance are horizontal. Trend lines can serve as support or resistance, but they're done differently. So you'll figure out what a support and resistance is from a trend line in a different way than what you do with just this support and resistance. We're just looking at key price levels that have turned the market in the past. A trend line will also serve as support or resistance. If you connect the lines, the lows or the highs coming across, oftentimes you'll see the market 1, 2, 3 bounce right off of it. And that way, the more times the market has bounced off of it, the better. You need to have a minimum of 2 points connected to make a good trend line, though. Would one normally start with a weekly support or resistance line and then go down to daily? Absolutely. That's what we do in the trading room. That's exactly how you do it. You look at your weeklies. where are your significant support or resistance from your weeklies. Once you have identified those, then you look at your dailies. Where are your significant support or resistance on your dailies? Then you can drill down even further. Where are your 240-minute support or resistance? Where's your 120? Where's your 60? But yeah, you always start on the outside and drill down and go in. That's the same way that we place all the trades in the trading room. We look at an outlook, so we want to know which direction is the market going to be going. So we have a bullish or bearish outlook. Then we drill down and find intraday prices to give us an ability to trade in that direction with minimal risk. So any more questions, any more specific markets you'd like me to look up? Where do I expect copper to go from today's long in the trading room? Let's pull up copper. Pull up copper here. I think copper could go quite a ways. I think it could really get some legs under it and start moving. This is what we were long off of. This trend line coming up across the lows. If you look at the trend line coming down off of the highs, then you're in a pennant pattern. It could potentially come all the way up and retest this pennant depending on how long it takes. That could be anywhere from around 780 to 760, depending on how long it takes it to get all the way back up there. But I would look for it to retest the pennant highs. Treasury bonds. Treasury bond support and resistance on a daily chart. Well, you're going to have pretty good support right there from these previous lows here on 10/25/12 and then back on 8/20/12, and that's going to be at 143 and 5/30 seconds. So that's going to be support that was once serving as resistance. You're going to have resistance again. We're coming up to some from the highs of 116.13 and 124.13. That's going to be right around 145, and then that's also off of the lows of 611.12. So those are going to be your first resistance levels. Next one, you're going to go across, see how many tops have stopped at a specific place. Could get a little resistance right around 147, 10/30 seconds. And then again, you step up to the next key turning points in the market. You're going to be right around 149 and 5/30 seconds. And then again above that, 150. And then once more at the highs, 151. You also have to keep in mind what can serve as resistance is mental resistance. What I mean by mental resistance is breaking through a new high. For example, the Dow, 14,000 is a mental resistance level, meaning people think it's going to be hard to break through 14,000, so the market will react to that. The psychology is, oh goodness, it's not going to make it through 14,000, so people want to get out of it, and that's a mental resistance even if prices have never reached there. And you can judge those off of just looking at it. What's the market price going to go to? So a mental resistance level would be 150 in treasury bonds. So you can normally judge that just off of the price. It'll be a very big, obvious number, i.e. 14,000 in the Dow. How long have I been trading? Around 10 years total. Is copper a leading indicator for the Dow? It can be and it can't be. Occasionally you'll see a correlation. I don't try to judge the direction of the indexes off of the direction copper is moving. The reason I don't do that is because here recently you could see the Dow's been heading higher, but for the past few days copper has just been down, down, down. So they can be slightly correlated occasionally, but not all the time. Watch housing starts. Things like news announcements like that, if you're looking at fundamentals, they can affect copper because copper is used a lot in building new houses with all the electricity and plumbing, things like that. So fundamental analysis can help you there when looking at copper if there's a shortage or a surplus. Futures. All right, so if there's no more questions, then I'll go ahead and answer any more that anybody has. If there are not any more, then we can go ahead and conclude today's webinar. Again, if you have any questions that are unrelated to today's topic of support and resistance, then submit them to feedback@microquant.com, and we will answer them in tomorrow's Q&A. And that's again tomorrow at 8:30 p.m. Eastern Standard Time, just like tonight. Sorry, 1 second. Someone asked for Home Depot. Home Depot is right up against resistance right now on the daily. You also probably have a bearish divergence forming as well. Yeah, you also have a great bearish divergence. Home Depot looks like it's going to be heading much lower, in my opinion. You're going to have resistance right at 68. You also have a bearish divergence or a double bearish divergence. You came up moderately overvalued, significantly lower high on the indicator. I would definitely be watching for Home Depot to sell off from here in the next few days. All right. Well, that's going to conclude today's webinar. I want to thank everybody for their time. Hope you enjoyed it. Hope you learned something. Like I said, we try to keep these webinars about 30 minutes long. If you have any questions that did not get answered, as there were a few that we missed, feel free to submit them to feedback@microquant.com, and we will answer them tomorrow at the Q&A. You can also just try showing up and asking it there. However, we don't always get all those questions. We try to get all the ones that were submitted via email. So again, thank you everyone for coming. I hope you enjoyed it. I will see many of you tomorrow morning in the trading room, and that's going to conclude today's presentation.